Here is one of the easy to read currency pairs, the Euro USD fiber, thanks to the USD index DXY, depending on how it is displayed on your broker, right? So today is 17th of September, 2025. And of course, the year is gradually coming to an end. It seemed like just yesterday when we entered the 1st of January 2025, and now we have October, November, December, and then the year is over. Summer also more or less has ended. School is back in session for the kids and every other person. And that means that the silent action that we've had for a little bit, because if you look over here, this is 1 hour time frame. And from this section here, you can see that we had a whole lot of silent action inside this highs and lows, where we have 1.1725 and then also 1.16 for the lows. And for a pretty long time, if you look closely, price broke out from this point here and then rushed back in. And then we had it go back to this highs over here. And you'll notice I'm saying highs, I'm saying lows. Price movement, price action, price behavior, you would always notice that it makes highs and lows. These highs and lows is simply what helps us to understand support, resistance, supply, demand, even the popular chart patterns that we trade, like head and shoulders, quasimodos, even the uh, flags, pennants, and so on. They're all based on the highs here, highs, and then also lows. Some could easily call it peaks, like this high here could also be called peaks, and then valleys, or whatever way you're looking at it. So take note, whenever you're looking at your charts, look at them as a form of highs and lows, which was produced obviously based on price, the battle of price between the buyers and the sellers. So price now has broken clearly out to the upside on this hourly time frame. And I'm going to be sticking to this hourly time frame for this time being, simply because I'm interested in what is happening for today. Why today? Now I'm going to switch over to the calendar. Remember, we always say that it's always a good practice for traders to pay attention to the calendar, and then it will help you to have a pretty good understanding of the volatility for the day. September 17, Wednesday, if you look closely, we have the US dollar high impact news, FOMC coming out. And of course, FOMC, if you are not conversant with that news, the Federal Open Market Committee news, it's usually very, very volatile. Well, as a matter of fact, years ago, it was really volatile, but I would say it hasn't been as, permit me to use that word, it hasn't been crazy as some 4, 5, 6 years ago and whatnot. So, as we have high impact news scheduled today for the USD, this simply means that USD index DXY is going to move significantly, which of course should affect the Euro USD, right? And that's why we said it's always good to pay attention to the calendar, right? To have a good understanding of what is going to be happening in the market. And that's why I said I am interested in the price action for today. So still on today, you can see that price now clearly has broken out from the last major highs over here and then pushed higher. So as it has pushed higher, the next question is it going to continue to push higher, or is it going to come back and test this level based on these highs? Remember, we said the highs obviously from price, and obviously who is moving price? It is the buyers and the sellers, the forces of supply and demand, which is in play, right? So this highs over here has now been broken. it was formerly a resistance at the highs here. And then at the other side, it now turns to support, right? So the question now is price going to retrace to test this area of about 1.177800? Is it going to test this area? Notice I'm saying area and not a price point. Is it going to test this area and then push higher? Or is it just going to push higher, right? Don't forget we have high impact news, so the volatility could easily go either way. But then, if you look at also what has been happening this week so far, Euro USD has been on a bullish run of over 160 pips, 160 pips, and today is a Wednesday. Can it go higher? Should it go higher? Will it go higher? Or are we going to see a pullback where we have fresh orders? Obviously, you can't see them on my chart, but trust me, we have traders all over the world. I'm sure if you're probably watching this now, right, you would also say, yes, I had maybe a pending order there, obviously, to buy at this section here. This is untested, by the way. This is an untested area of support. So, you can see the chart is live. Everything is moving here from price. It's still pretty slow now, simply because of the session we're in. It's not yet London session, but by the time London kicks in, then of course New York, and then we have the FOMC, which should cause some serious volatility in the market. So if you're going to be looking for sell positions, because in every market, there are obviously always opportunities in both directions. If you're going to be looking for sell opportunities, then of course, for this week, you are going to be a CT trader, counter trend trader. And if you're looking to buy, then you'll be a trend trader. So that means that this will be the best place for you to look forward to buying here. And this will be the best place area here for you to look forward to selling, right? If you look at this pattern here, you could probably maybe drop down in time frames. This is 1 hour. You could drop down in time frames and see what is forming over here, or even go higher in time frames, maybe 4 hours or one day, to see whether it has hit an area of resistance. And that is why we are having this hesitation in this manner, right? So it's going to be rather interesting if you ask me. I have my own bias, and I'll tell you now, based on how the market has behaved this week so far, surging 160 pips to the upside right from Monday and of course yesterday. Today, Wednesday, I would like to see what I would like to see a retracement, if possible. And if the new FOMC pushes it higher, then for me, it will form a stronger reason, like a magnetic pull to the downside, because we have formed a high over here, which should now act as a form of resistance. But if it breaks to the upside, then that side should now turn to support here, which obviously should come back here and then push higher. But I would not be interested in taking a buy here simply because of how far it has gone up over 160 pips, and of course the risk to reward ratio. If I was going to be looking forward to buying, this would be the best place for me as a trader. Now, you need to have your own bias in the market, have your own directional bias, have your own area of interest bias where you want to enter the market, whether you're a buyer or a seller, right? So use my analysis either for learning purposes, educational purposes, but not for signals. It shouldn't be used as a form of signal. Well, if you're going to use this as a form of signal, it's up to you, but make sure that your risk calculation, your lot size determination based on your account balance is up to par, right? And if you need assistance with that, I'll try to put the link in the description of this video where I have the position size calculator where you put in your account balance, you put in the risk you want to take, whether it's 1%, 2%, stop loss amount, 10 pips, 20 pips, or whatever. And then it does the calculation for you and then gives you the lot size that you're supposed to be using. There are other places that you can also get these calculators, but mine is one that I have done myself and I tend to use it from time to time, right? So I'm going to be rounding up this video now. I hope this video was helpful in a way, looking at the Euro USD, specifically the Euro USD and the directional bias for today, based on the fact that we also have high impact news, the FOMC coming out later in the day during New York session, right? So it should be interesting. As I would always say, ensure to protect your account accordingly. If you feel you don't know what is probably going to happen, I would say your money in your own account is better than your money in somebody else's account. Simply don't place any trade. And if you're going to, well, make sure your stop loss is in the right place where you hide it, and then also make sure that your risk management lot size calculation is up to par, and then accept the losses no matter what, because not every trade you take is going to be a winner. Okay, with that said, I want to say thank you. It has been a beautiful one, and I remain Tolu, Tolu, and of course, we will do this again at another time. Enjoy the rest of the day and trade safely, and goodbye for now. Cheers.